Hello everyone, I'm Matthias, and today I'm talking about why Hims& and Hers lowering prices for their labs offering confirms elements of my Hims& and Hers thesis. In the previous video, I laid out the core thesis saying that they will be a core agent in democratizing health at scale, doing so at a lower price. Having lowered the price of labs offering really does confirm some elements of my thesis, and we're gonna look at this today. So generally, today's video angle is going to be Hims and Hers returning economics of scale back to their customers. Yeah, as I said, Hims and Hers are lowering the price of their labs vertical to $349 a year. Their price was previously $499. And as I mentioned, this confirms a core element of my Hims and Hers thesis, that they will be able to democratize health, doing so at a better price than competitors will. As an investor in Hims and Hers, this is a brilliant thing to see. This really does show that my core thesis and my core idea of them owning the full stack, them earning the full verticalization, really does allow them to drive better prices for their customers, lower prices over time. As mentioned, my HIMS thesis relies on them really returning cost savings and economics of scale back to their customers, sharing those savings, collapsing and reducing the prices. This is a core stepping stone in order for HIMS and Hers to really achieve their full scale, in order for them to achieve their full potential. This is just the first step. They will reduce the prices and keep doing so in the future. In this video, I'm going to show you proof of them having done this previously. And I'm gonna tell why reducing prices on a platform is the best way to create and win in the market. The idea is that increased scale will lead to lower prices, and this is a feedback loop, a flywheel that just reinforces itself. So Hims and Hers lowering the price of their labs offering makes it more attractive for new customers, makes it even more attractive for existing customers. So you have lower prices and better value proposition for the customers, and this then increases the scale and efficiency of their scale because they can now offer this to more people. More people join the platform because of this offering. This leads to them having lower cost per dollar of revenue. It costs them less to make money, and then they save those cost savings based from their efficiencies and return them back to their customer, leading to lower prices once again. This idea of lowering costs and sharing scale economics with your customers is a core element in Nick Sleep's investment philosophy, and as well a core element in Jeff Bezos' design of Amazon. We're going to look at both. But first and foremost, I'm going to look at Nick Sleep and one of his quotes on scale economies shared. For some of you who don't know Nick Sleep, I think this article is a great way and great place to start. I'm going to link it in the description for today's video. Nick Sleep is one of those iconic investors who really did outperform the markets for a long time. He says, as a firm grows in size, scale savings are giving back to their customer in the form of lower prices. The customer then reciprocates by purchasing more goods, which provides greater scale for the retailer who passes on new savings as well. This is why firms such as Costco enjoy sales per foot of retailing space 4 times greater than run-of-the-mill supermarkets. Scale economics share incentivizes customer reciprocation, and customer reciprocation is a super factor in business performance. Finishing this quote by saying most companies pursue scale efficiencies, but few share them. As I've mentioned previously in my videos on marketplace companies, these usually tend to have winner-take-most economics. Now, I've used this article by Sarah Tavel a lot of times, but she says that what is required to get there, to a winner takes most situation, is a focus not on GMV but on creating happiness. This speaks back into this quote from Nick Sleep saying most companies pursue scale efficiencies but few share them. A lot of companies focus on maximizing GMV, maximizing their profits and revenues, but few share those back with their customers. Heading back into this Costco feedback loop, it really is clear to see that lower prices does increase scale, and this is a great way to increase your value proposition for your customers. Lower prices leads to increased scale and efficiency, lower cost per dollar of revenue, and then you pass those savings back to your customers, creating an even better value proposition. But what this does is really create a high degree of happiness for the customer. Going back to my favorite Sarah Tavel quote, in other words, happiness, not scale, is your moat. This whole feedback loop doesn't matter if it doesn't create happiness. Those lower prices should create happiness. As Nick Sleep says, this process of scale economics shared leads the customer to reciprocate by purchasing more goods. Saying here, and I'm going to once again quote him, scale economics shared incentivizes customer reciprocation, and customer reciprocation is a super factor in business performance. So being able to create happiness, being able to create value for your users, for the end user, is the core element in creating those winner-take-most economic. Hims and Hers lowering and collapsing prices for the lab's offering is a key element in terms of getting there. And this is not the first time they've lowered prices on their platform. Let's take a look at what management and Yemi Coupe had to say about lowering prices on their GLP-1 offerings.
Line of sight to future operational efficiencies gave us comfort to make our injectable offering even more affordable. We reduced the price for our 12-month SKU from $199 a month to $165 per month in December. The majority of weight loss subscribers are now opting for treatment plans of 6 months or more, which we believe will translate into strong retention and improved adherence for our weight loss subscribers.
So yeah, as we can see, this is an example of Hims and Hers sharing those scale economics with their customers. And them lowering prices on GLP-1s is not the only example. They've lowered prices consistently on their platform, having done so for a lot of time. And you can just look at this company, look into its fundamentals, and see that this has been a common practice for this company. Now, what allows them to do this and collapse and lower prices on their platform is due to the fact that they own the whole stack. They own everything from the compounding infrastructure to the app that you use in order to get these things. This is very well illustrated in this graphic. So Hims and Hers owns everything from the consumer brand to the distributed provider network to the clinically focused EMR, digital native telemedicine platform, so the app, the digital prescriptions, the cloud pharmacy, they have everything. So the idea is that no money has to leave the Hims and Hers ecosystem. It's very similar actually to United Health Group, where they have Optum and they have Optum RX and they have the Optum pharmacies and so on, and then they have the insurance that you pay, so no money has to leave this ecosystem. The same is the case for Hims and Hers. No money has to leave this vertically integrated ecosystem, so everything stays within the Hims platform. This really does allow them, and this really does give them leverage to lower costs and lower prices for their customers, right? So this is why Hims and Hers can do this, and this is why Hims and Hers in the future will continue to be able to do this. And here is what management has to say about them being able to lower prices because of verticalization and in terms of lowering prices overall as a goal on the platform.
I think our weight loss specialty follows a very similar principle that we deployed across our historical specialties. And that centers around scaling, verticalizing, and optimizing, and passing the value and the savings back to our subscribers.
And this can be followed up with something they said afterwards.
We're excited to continue to invest to verticalize our operations at a high quality standard to continue to pass those benefits back to our subscribers.
So as we can say, this whole idea of verticalization, this whole idea really does allow them to return those economics of scale back to their customers. And something that they're planning to do in the future, and something we're seeing live in action now. This is why I'm so positive about this. So this is the Hims and Hers flywheel from their own reports. So they say that more subscribers on the platform leads to additional structure, data, and deeper insights. So them lowering prices, think back to the Costco flywheel for a second, them lowering prices adds more subscribers to the platform and democratizes the offering that they have on their platform to more users and even to existing users, which allows them to get additional structured data and deeper insights, leading to better data-driven personalized solutions and services. So really this is the whole lab service in a nutshell. Personalized, data-driven solutions and services democratized at scale at lower prices because it is personalized, right? So the dosage you get is the dosage you need based on your biomarkers. This leads to higher quality outcomes, better user experiences, thinking back to Sarah Tobel, more happiness, these processes of reciprocation as Nick Sleep mentioned, leading to more subscribers on the platform, more money being spent, and so on. This is the Hims and Hers flywheel, which really does rest on what we did talk about earlier with them owning the full vertically integrated ecosystem and the full stack, from the pharmacies to the compounding infrastructure to the app that you use to the labs that they've used to sort of gauge these and look at your biomarkers, and they own the AI data feedback loops that interpret this data that keeps improving by the day because it has more input to get feedback on, right? So this is a reinforcing, accelerating feedback loop that allows for exponential returns in user satisfaction, exponential returns in user experiences. This allows for exponentiating fundamentals, not linear fundamentals, as we usually see, where companies have to increase their costs in order to increase their income. Hims and Hers can increase their income without increasing their cost by so much. They really do scale intact in tandem with AI scaling laws. AI scaling and AI improving fundamentally does allow them to gauge and analyze data more precisely, to use data more efficiently, right? So this Hims and Hers feedback loop really does spin, and that allows for exponentiation of their fundamentals, of user experiences, of data feedback, of data interpretation, of AI feedback loops. So yeah, this is the Hims and Hers flywheel. This can be seen in tandem with thoughts of Sarah Tavel, of Nick Sleep, and all these other things, right? Taking a lot of inspiration from this flywheel: increased scale, more users, lower prices, because they can interpret that data better. They can personalize the medicine better. They get more precise and better outcomes from that data and from the medicine, leading to more happy customer outcomes, and so on. So this process and feedback loop of reciprocation does spin for Hims and Hers. And this is all because of them lowering prices on their platform. And what is crazy about this whole idea is that Hims and Hers aren't strangers to even decreasing prices on their platform in detriment of short-term profits. Let's hear what Yemi Okupe has to say about this.
Reflected in our guidance. Additionally, our guidance incorporates a negative impact of between 12 to 18 million in the second half of the year for both revenue and adjusted EBITDA as a result of the strategic pricing changes previously discussed. We believe these strategic moves will drive both stronger retention and acquisition dynamics in the future, as customers have the ability to access a unique and differentiated set of solutions on our platform that are less readily available than standard generic solutions. We have high conviction that gains in efficiency from strong execution and economies of scale will enable us to continue to expand our adjusted EBITDA margins over time.
So here Yemi says that this will have a negative impact on their short-term profits, around $15 million of negative impacts. So this is a short-term hit to the company, a short-term hit to the platform's profitability, but a long-term thing that will really help and really exponentiate returns. So something this reminds me of is this famed part of 2003 Amazon annual shareholder letter. So in this letter, Jeff Bezos notes and lists a lot of things that really did hurt the Amazon bottom line and Amazon short-term profits, but did yield long-term exponentiation of their user experiences. So here he lists a lot of different examples, especially this idea of being able to leave custom reviews that sort of hurted sales in the beginning. He says here, though negative reviews cost us some sales in the short term, helping customers make better purchase decisions ultimately pays off for the company. Here he also mentions and follows this up with, when we launched Instant Order Update, we were able to measure with statistical significance the feature's slightly reduced sales. Good for customers, definitely. Good for share owners, yes, in the long term. This also applies for Hims and Hers lowering costs on their platform. This doesn't hurt sales in the near term, but it lowers their margins, but it does increase scale, and this is something that Amazon prioritizes as well. Here Jeff Bezos says specifically that our pricing strategy does not attempt to maximize margin in percentages, but instead seek to drive maximum values for customers and thereby create a much larger bottom line in the long term. So this basically beautifully sums up this whole idea of Hims and Hers lowering prices on their platform. It doesn't maximize margin percentages. It drives maximum value for customers, and then it creates a much larger bottom line for them over the long term because they can maximize customer happiness. Happiness is your moat, scale is not, as we just saw before. I would just like to add this little quote from Jeff Bezos in terms of this idea of returning economics of scale back to customers. He says here, among the most expensive customer experience improvements we focused on are our everyday free shipping offers and ongoing product price reductions. Eliminating defects, improving productivity, and passing the resulting cost savings back to customers in the form of lower prices is a long-term decision. We're seeing the same thing with Hims and Hers. So hopefully in this video, I managed to explain why I think Hims and Hers being so good at producing these cost savings and passing them back to the customer is such a good thing in the long term, and why you as an investor should hope for them reducing prices in the future further. Now, it should be said that I do own shares of Hims and Hers, and this is not meant to be investment advice, right? Hims and Hers shares are also held by NewDeal Invest, the fund at which I work. But this video or this content hasn't been approved or looked through by NewDeal Invest. These are just my opinions. These are my thoughts. Hopefully you've learned something from this video. Hopefully these perspectives helped you in order to gauge Hims and Hers and see why them reducing prices on their platform is something you should hope for in the future. This really will lead to them being able to democratize good health, personalized good health at scale at lower prices than competitors. Thank you for watching. I appreciate your time, and I'll see you in the next video.